Okay, folks, we had a bit of a delayed announcement on Advanced Auto Parts, but earnings are now out. I got to tell you, I'm kind of confused here. Maybe it's just the market environment that's causing the shares to dip. But I took a look at the earnings, and they looked pretty good. Uh, Strong earnings. They raised their dividend by 50%. I mean, that was really good. Guidance, same store sales up 1 to 3% versus consensus of 0.7%. I mean, across the board, good stuff. I mean, they even added another $1 billion to their share buyback program. Initially, the shares moved up higher, but have now closed essentially flat on this session. So that's good for us, assuming that we trade the way we are now tomorrow morning. So we're feeling good about the trade, but we never get too cocky. We'll feel good about the trade a lot more once we're out. So I've already put in a buy to close order at 70% profit. I may change that, assuming that we don't see much movement in the share price at the open tomorrow morning, because those buyers of the options, I mean, they really bid up the call options, and even the put options caught a bid, but the real call options just really got bid up hard. So somebody's going to take a bath on those options in all probability. So their loss is our gain. So that's the name of the game. All right, let's go to the charts. We're going to go over UBOT for Franklin, and we're going to want to also take a look at PayPal. I know somebody brought that up on the conversation earlier, and I don't think I addressed it, so we're going to address it now. So I want to begin with, of course, the bond market, as we always do, and we have TNX, which is, you remember, last week we closed back down below support. We were above it, we faded. Does that happen again? Right now we're trading above resistance. We're not going to know, obviously, until Friday afternoon, 4 p.m., whether or not we hold support or do we continue to move up higher. Now, the signals by the market are a bit wonky. I'll talk about that in a moment. I'm really talking specifically about equities. But the bond market showed strength today. It was up a little bit higher. No new daily high, no new daily low. Could this be topping action? Maybe. We have the FOMC minutes coming out on Wednesday. Let's check out the bond price, 20-year bond price. We broke down today. We broke down below support. I think we're trying to consolidate at this 136 mark. Volume slightly below average. Stokes are a little bit of a mystery here. The tips, I don't like the moving averages on the tips. I don't like the daily price action. And the only conclusion I could draw from this price action is that bond traders are assuming that the Federal Reserve, with their very, very hawkish, and I say that very, very tongue-in-cheek, that the Federal Reserve will crush inflation by stopping the buying of bonds and doing a couple of minor rate hikes. And I don't think so. The dollar closed up just over a quarter percentage point. Continuation move up higher, new weekly high on volume. The VIX closed up on the day, but this is clear topping action. You saw it here, you saw it here, you saw it here. So we may, in the coming couple of days, may be getting set up for a rally. The Ukrainian situation appears to be abating a little bit. Perhaps that will be cause for a very brief rally because inflation is not going anywhere quickly and Fed rate hikes are looming. The Dow Transports up over 0.75 of a percentage point. We did recapture a support level. Volume below average. Stokes rolling over. The S&P 500 daily chart. The 50-day moving average is now declining. This is not a good situation. I get the feeling that traders are betting on a higher low. Let's lay that out. Maybe they're right, but we have a pretty wide trading range from which to trade in before we get a resolution either the upside or the downside. So I think we're going to get some backing and filling for the next couple of days. We did rally off of support. Volume was high again. I don't see a compelling reason to get long at all. The Dow Jones, again, another chart where I think they're trying to put in higher lows. Just update this. So again, another chart where we could trade for the next couple of days back and forth with, there's no clear direction here. I mean, take a look at your stochastics. They're rolling over. You know, you could get a situation where we begin to hook back up, double bottom setup in a higher low, and all of a sudden what looks like a lackluster do-nothing chart becomes, okay, well, maybe we have something setting up here. But we're not at that point yet where we're ready to say, okay, let's dip our toe in the water. Closed up slightly on the day. These Stokes are horrible, rolling over. You have your fast line down below the 50 line. As the old saying goes, with Stokes declining, especially down below 50, rallies tend to fade. What happened today? We rallied, we faded. Yeah, we still closed up, but we got stopped dead at resistance. Volume was good. Small caps. The RSI appears to be putting in higher lows. Stokes, they're rolling over. Maybe they'll hook back up. Maybe they won't. And we are holding a support level. Down volume declined. Usually I have a pretty clear idea of which way we're going to go with this market. Right now, I can't say with conviction we're going to go in one direction or the other. So I'm punting here, admittedly. XLF down over 1% on the day. We bounced off the 50-day moving average, which is rising. The however is the 20-day moving average in green is crossing down below the 50-day. That's not what your moving average should be doing if you're bullish. MACD losing momentum. The banks are not looking good. Technology attempted a rally today. They were rejected. We're rolling over on Stokes. RSI still down below 50, and volume is rising sequentially. So tech cannot be bought right now. Consumer discretionary names, they rallied, they faded. The declining ceiling is a 20-day moving average at current. Take note of the 50-day declining. It's going to be picking up speed in the next several trading days. And before you know it, we're at that 200-day moving average, and you're going to see headlines squawking, especially when the S&P 500 gets the 50-day down below the 200-day or at the 200-day moving average, that you're going to hear the financial news media saying, oh my God, the death cross, as if they didn't know it was coming. You know, maybe they didn't. Energy, daily chart. So finally a pullback here. I think we're going to pull back further. I mean, we really should have had a continuation move higher, and we didn't get it. No follow through. And we were down on volume today. So warning flag on the track for energy. Emerging markets, daily chart. Strong dollar, weak emerging markets. We're not even going to talk about this. Avoid until the dollar breaks. Gold. A big move today, up nearly 1.5%. We were higher, but we faded to close down below 1870. I think what we're going to need to do here over the course of the next couple of trading days is retrace back down to this 1845. So a very good day for our gold mining stocks. Let's flip on over to TrendSpider for our positions and watch stocks. Okay, first up, GDXJ. Nice continuation move up higher this week. New weekly higher highs. We have a little bit of resistance immediately below, actually support immediately below because we closed above it. Now, if we get a continuation move up higher, we can head all the way up here before we hit a hard stop at around $43 per share. So I'm going to create an alert here. And maybe at this price point, I'm not going to sell, but I may sell covered calls. And we'll keep this active for a few days. We're good to go. Our alert is set. Stokes continue to rise. So I think we have more fuel in the tank here before we get a pullback. NUGT, a clean breakout today above resistance. It'd be nice if we get a pullback and a retrace of 51.85. Entirely possible. If we don't, or even if we do, and we get a continuation move up higher, we're heading up here to $56 per share. So that'll be a very, very nice move higher. Volume was strong. Stokes are rising. SILJ, sticking with the miners. A strong day, a continuation move up higher, higher highs. Remember, we have resistance immediately above at around 13 bucks a share. And that has acted as resistance in the past. So I wouldn't go adding more right here, right now. We're too close to a resistance level. Now, if we pull back and retrace down to, say, 12 bucks a share, then I would be fine with adding more. AGQ, silver. Silver actually closed down off of its opening high. Obviously, still new weekly highs. And I think that we are probably going to rally up to a resistance level at around 38.50. Stokes rising, good stuff. Down volume was light. That's good to see. Cal-Maine Foods. So Cal-Maine's kind of stuck in the mud. This resistance level, take it off, throw it back on, you could see is acting as a pretty stiff resistance level. Our Stokes is still rising. I'm confident that we're going to move up higher because the macro trend at current, look at this breakout on a monthly time frame. Looking really, really good, assuming that we close at where we are now or higher. So I'm loving the setup from a macro view, even from a weekly view, very strong. So I think that we'll get some backing and filling over the course of the next several days, and then we will blow through this resistance level. Okay, so we opened up a position short of the ARK funds. Why did we do it? Well, we stuck with the strategy I mentioned on Sunday Night Futures Live. And that strategy was, if we break this bear flag setup, which I believed it to be, then we would short ARKK. So we now have a short position using naked calls at the 85 strike, so right at resistance, and about 15% probability of trading in the money. So if we get a continuation breakdown, we'll continue to roll down that strike, trying to stay at that 15% probability of trading in the money. And then, of course, once we see it begin to bottom out, hypothetically down here at support at around 58.62, which is a good ways away, then we could look to get long of the shares for a counter trend rally. Now, what I wanted to get filled on today, but never did, was a strangle on LABU. I wanted to sell to open the 1450 puts and the 22 calls, and they wouldn't fill it. So as you can see here, we broke down below support. This is a pretty bearish setup. We're probably going to head down lower, which is why I wanted a little bit of insurance on the call side to offset the pressure on the put side, which I expect to occur. But if we have the shares put to us at 1450, I'm comfortable with that. So I was kind of disappointed we did not get that fill, but I'll keep that trade active until we do get filled. DWAC, nice orderly pullback to these rising moving averages. I don't like the lower high on Stokes, but I do like the pullback. It's a healthy pullback. So we'll remain long here. Gold money. Now, gold money had a really good day today. It broke out. And we're going to have resistance up here at about 161 per share. With gold ripping right now, it's very favorable for gold money. They trade usually in tandem. There's a very high correlation between gold and gold money, so I expect it to move up higher. So we'll remain long here. Now, positions that we're watching, UBOT. I love this sector, and you could bet the power that these truckers are exerting over federal governments all across the globe, they are going to ramp up automation as quickly as possible. So this is going to be the wind at the back for UBOT. The question is, are we done going down? I don't think we are. This is a weekly chart. And if you take a look at resistance above, it's right here. We have put in a new weekly low. Daily chart. I just threw the heat maps up here. You can see clearly a lot of resistance. On a daily time frame, we broke down on Friday below support in blue. Continuation move lower. I have to assume that we will probably move lower here over the course of the next several trading days. The however is if we break back above the support level at 28.23, we may have a higher low. So let's just keep an eye on this. Does this hold? Because down volume for the past couple of days has been pretty light. So I want to be open-minded. And I don't think yet that this is an investment by any stretch of the imagination. Because on a monthly time frame, we're still pretty weak here. We're showing no signs of a bounce. And honestly, I think before all is said and done, we're going to need to retrace the entire move of the COVID rally. I know that's not a popular thesis, but I think in the end, that's what's going to happen. We have too many variables out there that could really rock this market, whether it be inflation, the Fed, a mixture of both, geopolitical risk, so on and so forth. Now, we'll leave it off with PayPal. Now, PayPal, I would love to pull the trigger on. You can see here I have an alert that's set. This is a monthly chart at 110. If we get a bloody day, 1 day, 2 days this week, we can get an overshoot down below that 110 mark to possibly 100. If we get down to 100, I'm going to be buying PayPal hand over fist, especially if we bounce off of 100, then rally and close back above 110 by the end of the week. Let's go to the daily chart. So the daily chart, you're seeing still topping action. Every time it begins to rally, it fades. I think ultimately we're coming at a minimum down to 110. That's the initial price target I'm looking at. If we get a very volatile down day, then overshoot to 100. Look for a reversal to close back above 110. We add more on that bullish reversal bar. With that, folks, let's just wrap it up with a review of how Advanced Auto Parts is doing. For those checking in, we sold a Strangle, meaning a deep out of the money call contract up here and a deep out of the money put contract down here. And so far, this trade is looking very, very favorable for us. So again, we have a 70% potential profit here or higher. We have the order in. So hopefully it gets filled tomorrow morning and we are out of this thing. And I think the lesson to be learned here is that they did announce good earnings, share buyback, dividend increase, yet the shares are down. This is speaking volumes about how stocks are behaving during this earnings season. That's why I went deeper out of the money to the put side than I did to the call side out of fear. Have a great night, folks. Be well.